between lots of apologizing for certain things and doing what we do, as self-managing people do, good ones, good hosts, I didn't really end up having to, refund huge amounts of money or cancel bookings or anything like that. But you very well could in certain circumstances. So I think we lucked out.
Hi, I'm Wyatt.
And I'm Grace.
And you're listening to Our Dad and your host of the Vacation Rental Revolution podcast.
What's up, guys? Welcome back to another episode of the Vacation Rental Revolution podcast. I'm your host, Shawn Moore, and we're back with our Friday interviews where we get to talk to successful short-term rental investors willing to share the ups and downs and everything in between on their journey into short-term rental investing. And today we have Kimberly Nave joining us. And so, Kim, thanks so much for joining us today.
Thank you. Appreciate you having me.
Absolutely. Super excited about this conversation. You and I were chatting a little bit offline. I said, you're going to have to repeat all this stuff, right? Because we're catching up. And I said, and that's what I love about these is it's a chance for me to catch up with you and what the journey's been like so far. And then we let other people listen in. And so what I always like to start with, Kim, is just the background. Tell me, where you're from, what kind of pays the bills, but what got us interested in real estate investing in the first place. And then let's talk about the journey, because you and your husband, Travis, have built a really nice little portfolio at this stage in the game. And so, but let's start with the background.
Well, I started in apartment management when I was very young. So managing apartments for family starting at 16. Bought my first building on contract from Dad. So, got the hand up at 18. Purchased some more, got into real estate sales, started into general contracting with family also, building single family homes. So I had building background, just working with my hands, that kind of thing. Not necessarily me building, but, I can point. But I enjoyed the real estate sales, the working with the people, finding them that right fit. There were aspects of the general contracting I really liked. I love, the building aspect, kind of watching it from the ground up. And then didn't love doing the long-term property management stuff. So I moved into kind of having a management company for most of that, and sold a big building and ended up needing to kind of put that money somewhere. And I found a lake house about an hour away from our home. And I thought, I'm sure with all of this background I have, I could set up a short-term rental. I'd thought about it for 5-10 years, about kind of wanting to do something. And so I justified buying my family a lake house by saying, well, at least if I short-term rent it, as long as we cover the bills, we're good, right? Yeah. And we got that up and running, and it just exploded. And I'm like, I really enjoyed it. Again, with the construction background, that, I just love taking something that's, maybe not so great and just making it just fantastic, Yeah. And so that's how we ended up here with 7 properties now.
Yeah.
2.5 years.
Fast forward to 7 properties later, right? And it's interesting. Like you and I were talking before I hit record, and you said, I really liked like I used to do some fix and flip, and I like the aspect of kind of the before and afters, taking it to where it was to where it could be. And you said, I like that there's that element in short-term rentals, and, and to kind of where you're able to see that transformation, you're able to realize, okay, there's certain levers you can pull to create these great experiences, but also how that actually relates and correlates to how much money you make in short-term rentals. And so that got you excited about it. When was that? When was the first one?
We bought it in 21.
Okay.
That one was pretty much a top to bottom rehab inside though. So we didn't get that launched until May of 22.
Okay.
And I think I think I joined Odyssey shortly after that. It was in between that launch and then the big one that we did in Arizona.
Right. Okay. And
Yeah.
so kind of justified that first one and just saying, hey, listen, I'm going to try this out. I got some money to place. If it breaks even, and then it obviously did really well, better than
Yeah.
break even. So now your eyes are open to the fact that, hey, maybe this is a viable asset class.
Yeah.
Maybe I'm going to focus in on this a little bit. Right. And,
Oh, and it was fun, you
yeah.
know.
Were you guys able to use it a little bit as well?
Yeah, but probably not as much as what we had anticipated,
Right.
because it booked up.
Yeah.
My plan was like, okay, I'll get it on the market and we'll just go when it's empty. And that first summer, it wasn't empty. So I was
Yeah.
like, okay, well, that's good, especially from an entrepreneurial aspect, but also like we didn't probably get to use it quite as much as what we were thinking.
So then you decided to go all the way across the country and go into Arizona. What brought you to Arizona?
Well, my oldest child lives in the Phoenix metro area. And
Okay.
so, you know, when we had some capital 1031 exchange to kind of add something reasonably substantial to the portfolio, we could really buy anywhere. And it was a little bit mind numbing, looking at markets and researching in the air DNA and doing all of that. And so I just thought, you know, if I'm going to do something, why am I looking in all these other areas when I can really just find something that's going to be at least drivable to him? And it's a great market. You know, Phoenix is a great market. You know, parts of it are very saturated, but our concept, you know, we're a little outside the box, and so it was definitely a roll of the dice. But the property we bought, but it's doing well. So
yeah, and it's a beautiful property, and you know, with that, and kind of, you know, Phoenix-esque, or, you know, that greater Phoenix area in Scottsdale, it's all about that outdoor living space. And you guys have some, you know, amazing outdoor space, which is really fun and really dialed in. So how did that property perform as far as what you were projecting, what you were thinking about when that one started launching?
Better than I had anticipated as far as my gross numbers. My expenses are a lot higher than what I thought, so it's it's balanced out. You know, we're not running to the bank, but we're definitely not coming out of pocket, and you know, definitely doing good with it. So
what are some of the expenses that were higher? You know, because as like, one of the goals when we have these conversations is to kind of share the lessons along the way, right? And so, you know, you guys are on property number 7 now, and this was property number 2, and we're saying, okay, well, maybe we missed a little bit on the expenses, and now I'm sure you're anticipating higher on certain things. What are some of the things that brought those expenses higher than what you thought?
Maintenance.
Okay.
You know, the property's on 2.25 acres. You know, I had pest control, I had grounds maintenance, I had that stuff in there. I really, it's a little bit, you know, I didn't build a new construction, so I probably didn't build in, and this probably goes for almost all of my properties. I probably didn't build in enough, you might say, capital improvement budget into each property's numbers. Because I feel like I'm continually investing in some capital stuff because the properties were older. Yeah, I went in and they look beautiful and whatever, but then you have a sewer line crushed, or you have a septic with tree roots. You have a well go bad. All of these things happened. Different properties.
You dealt with all those. It's interesting how many of my recent conversations we've had with sewer and septic issues. In fact, I you know, inside of our Odyssey group, I think you might have even seen, I've been trying to say it a lot on our coaching calls, like, hey, make sure you're getting septic inspections and getting your sewer line inspections. For a few $100, you can get the cameras in there and look at that stuff, because they can be really expensive and just a pain in the butt type of a problem, right?
Well, especially if you're already live. Both of these properties were live pretty much when all of that was discovered. And, you know, thankfully, between lots of apologizing for certain things and doing what we do, as self-managing people do, good ones, good hosts, I didn't really end up having to, refund huge amounts of money or cancel bookings or anything like that.
Yeah.
But you very well could in certain circumstances. So
Yeah.
I think we lucked out.
Yeah. And it's good. And like you said, and it's how you handle the problems, right? And talk about, on the management side, that's a big decision of whether you're going to manage these properties yourself, whether you're going to ultimately hire a property manager. We talk a lot about it inside of our group of making that decision and being very thoughtful about that decision. When you got into the game originally, when you bought that first one, were you thinking you were going to build a portfolio like you have? And were you planning on self-management the whole time?
We are definitely DIY people. So 100% planned on managing myself.
Yep.
When we bought the first property, there was no plan. It was more so, get this one launched. Let's, hopefully it pays for itself and we have a lake house to go, hang out. So it was more like moving into property number 2 and 3 and 4, where we're like, okay, like this is actually more of a pivot of our business and our portfolio. Because I did sell my largest building for capital and shifted that into the STR market. I'm getting sidetracked. What did you ask me?
Yeah. Well, just on the management side, and just how it kind of probably has grown to become really like you've got your own management company now, right? I mean, essentially with your portfolio. I mean, it's and as you said, like not really wasn't the plan. I mean, we were going to self-manage always, but maybe as you grow, you have to figure out systems and processes because there's economies of scale in management.
Yeah. Not only did I set up 3-4 properties in a year, but I set up a whole new business with software and marketing funnels. And it was crazy. It was quite the ride.
Right. And now once it's set up though, tell me if you what are your thoughts about when you're, after you get 2 or 3 and you're starting to set that up, then you can start to just plugging properties into the system that's already built outside of, unless they are in different areas, right? When you're self-managing and if they're in different areas and you can't tap into the same resources as far as cleaners and or maintenance people. And I know you guys do a lot of it yourself. Yeah. But you've got to have some boots on the ground, especially when you're in Illinois and one of your properties in Arizona, right? And it's a little, you've got to have a team there.
Yeah, absolutely. So, you're building a team. This last number 7 is in an area that's not right at home. It's close enough to drive to, but part of the reason I opted to buy that one is it is in a location where I already have one. And so it was a little bit easier to kind of plug into that and just sort of, I don't know that there's anything easy about self-management or setup. Yeah. But it definitely makes it simpler.
Right. Just to have at least the software systems in place
a little bit of infrastructure already that you can kind of plug into. Yeah.
Yeah. Yeah. Awesome. And so talk to me a little bit about, because it's a question that a lot of people have, and you have been in the real estate investing game for a long time. It sounds like you grew up in it with your dad that was really involved in it and got you involved really early on. And you've seen a lot of different asset classes, particularly you're talking about apartments and multifamily stuff. And you're divesting some of those properties into short-term rentals. What are the reasons for that? What do you see as the pros and cons? I always say I love real estate in general. I think every asset class has pros and cons, including short-term rentals. And so what are the things that you like about the short-term rental game, and what is it that you wanted to pull some money out of the multifamily game to put it into it?
That's a really good question. I I am just, I think I just have a very entrepreneur brain, and I think maybe I can get a little bored.
Yeah.
So, the short-term rental whole setup purchasing is exciting. I love the challenge of shopping for that right property, for that right sofa. What do how you're going to set it up. And so I think that I had been in the long-term game so long, and I was a little bit more hands off. And then, of course, the opportunity to have a much better return
Right.
is enticing as well, especially as you grow a little bit older. And
Yeah.
you're like, I'd like to be actually done working and,
Right. At some point in the future that we can see, right?
Yeah, exactly.
It's interesting. I love that answer. For me, that's honestly what I got into it for as well, was my ADD. It felt like, right? I got bored with long-term rental stuff. Honestly, in fact, when somebody says, "Hey, I'm really looking for something super turnkey, I don't want to deal with it, I don't want to do anything," I said, short-term rentals might not be the right fit, right? Because there's a lot more moving parts. There's a lot more to do. The returns can be better as long as you pull a lot of the levers, but they're not always guaranteed to be better, right? That you have to do the things to make it better.
I feel like, I mean, the numbers that I've seen, if you're paying a property management company to manage your short-term rental, those fees are so much higher than long-term rental.
Yeah.
And by the time all of the expenses of everything is in there, I don't know that it's necessarily more lucrative unless you're managing it yourself.
Yeah. And it's
I'm
a
sure
great
certain
point. I mean,
properties can be, but
you're talking about, I mean, a typical property manager on my portfolio, my average is 30% that I pay out on my portfolio. That's a lot of money, right?
that's
A third
lot.
of your gross income going out the door. It's the largest expense.
Yeah.
And so it's very difficult to find properties that are going to give you a really good return when you're paying out that kind of money. And you're exactly right. Now, there's a lot of things I love about them, but they're not easier by any stretch, I don't think. I think anybody that's in the short-term rental game, especially now, I mean, there was a period of time right after COVID that everybody made money and everybody looked like a genius, right? And so because the supply and demand gap was so wide, there were so many people wanting to stay in them, and there just wasn't a lot of them yet. And now
I missed that gold rush.
Right? Yeah, I got to take advantage of it for a minute, but just because we've been in it for so long. But it was a little misleading for a lot of people, and which is why you hear people talk about the Airbnb bust and everything else that's out there, is because a lot of people jumped in, and now everybody's not making money. Your fair share of business doesn't make you any money. You got to get your own fair share of business. We talk about that all the time. But if you know how to play the game, there's a lot of money being spent in the game as well. It's still a very mainstream asset class at this stage in the game. And it's funny how what got you interested in the same kind of thing that got me interested in it back in the day was I just was kind of bored with anything long term, and so I liked this aspect of the game, and then I still enjoy it. Because I also like to be able to be rewarded for the work that we are willing to put into these properties. Right? Not everybody's willing to do what we're talking about doing. You guys operate at the very top of your market that you're in, and some of the markets you're in, and have them. We have what we call our 1% club, and it's. When you're able to do the things that it takes to operate at the top of the market, it's a pretty fun game to play because it can be more lucrative for sure. Right. And it's, and so you guys, you have, I've always said I'm a sucker for A-frames, and you have a couple A-frames that that I love. And tell me about, especially the first one, because when we talk about vacation rental markets, a lot of people assume you have to buy in these major resort towns that have thousands of properties, and they're the only ones that work. And so I want you to tell me a little bit about the story of that property, because I think it's a good lesson that you don't have to be in those markets that everybody knows about, right?
Yeah. Absolutely. The first A-frame is just tucked away in a little grove of trees and some neighboring houses. in between my own hometown, which is only about maybe 100,000 people, and then another smaller outskirt town that's, I don't know, I'm guessing probably 15,000, 20, something like that. As a real estate agent, I've been privy to seeing properties kind of pop up. And I wasn't even, half of my properties, I wasn't looking. This one pops up in my email feed from a fellow real estate agent, and I just saw it and was like, oh my goodness, okay. I'm gonna have to go look at that. And it wasn't a huge turnover project. And I was having a hard time comping it out because of where it is. It's not, it's not in a big market. There's zero short-term rentals anywhere close. I wasn't sure how a quote unquote vacation rental would do in our area because we're not a vacation destination. Yeah. But it just was a property that just drew me to it. And I thought, you know what? Worst case scenario. What's my worst case scenario? I set it up. I lose some money on furnishings because it doesn't make it, and I sell it because of, we've done some things to it, and maybe we break even on the sale. That's worst case scenario. I couldn't find any comps, and I almost didn't buy it. And I just decided, you know what? I'm a leap off the cliff kind of person. I'm a swing by the seat of my pants. It doesn't always have to align or work, or I'm not a big numbers person. I mean, I run the numbers, but it makes my head explode. And so I just did it, and it's one of our best properties.
Right.
And I mean, the occupancy rate and the nightly rate that I get, I'm just amazed by it.
When you say it's not a vacation destination market, right? What are the reasons people are coming in there and staying? Do you have a good feel for who's using it and who's coming in?
I think a lot of this particular, the A-frame, is that we are a couple hours from Chicago and 2.5, 3 hours from St. Louis. So two very big markets. And this particular property focuses on, rejuvenation, connection with loved ones. It's tucked in a little grove. Like, you basically, when the trees are have leaves on them, you can't see any neighboring property from the house. And, the pictures we got were just fantastic. And people just come there to disconnect from city life. But it's close enough that it's not this huge thing. They can come for, 2, 3, 4 nights, really, unplug from all the craziness of life and rest. And, we've followed, the Vodacy kind of plan. I've got an infinity game table in there. We've got, the hot tub, a really nice outdoor, gazebo, lighting and gazebo area. And, it's just done very cozy, but it's also got the interest of the A-frame. So I think that helps grab the attention in the main shots. And I'm blanking on our terms. You know what I mean?
And it does. And it just has that feel, right? And that's why I say, I think sometimes people just want to get away and disconnect, and they don't want to travel on planes and go to busy areas. Like that's how I like to travel. I don't like going to the big major markets. I love the little backyard resort areas that not a lot of people go to. I love going in off seasons to places. And I think that there's a big draw to that, especially for that target audience that's coming from 2 major metro areas. Right. And they're just like, okay, I just kind of want to get away from the noise for a minute. And it doesn't have to be a whole bunch of other things to do while I'm here. I just want to relax. And you're in, like you said, like with the kind of that magnet or hook photo, that very first shot, it kind of gets them drawn in, and then they just keep going, right? They look at it, and you've got some great pictures, and it articulates what you have well. And you've given a lot of advice inside of our Empire Club Mastermind group of saying, hey, listen, you guys, you don't have, some small areas can work pretty good. And I think it's always fun to see that and realize that, because it is kind of scary, right? And to your point, you're like, when you can't run a lot of numbers, and it's more of it ends up becoming more of a gut feel of saying, am I attracted to this? Probably somebody else would be as well. And it's a really fun house. And so you just bought number 2 A-frame. This is your 7th property, but I'm skipping ahead now. The second A-frame. And you told me there's a kind of most of these properties, you're not looking for them. You're not in the market. Right. They just pop up. And so you said it was a kind of a fun story. And I haven't heard it yet. So I want to hear this one.
Yeah. So our very first short-term rental is on a lake about an hour from our house. And we were actually one of the few times we've been able to enjoy the property when it was empty. I was there, and my daughter and I went just for a walk down through the neighborhood. And there's this little side street that we just decided to walk down because it was cute houses and trees. And so we're walking down the street, and we walk past this adorable A-frame, and it's also on the lake. And I was like, oh my goodness, I love that. I'm like walking by with my daughter, and the street dead ends. So we're walking back, and the owner of the house is pulling out. And I'm like, oh, do I say something? Do I not? Do I ask him? And I'm, to the mortification of my daughter, I'm like, oh, hey, really, your house is adorable. Have you ever thought about selling? And he was like, well, no, not right now. But, we're on like the 4 to 5 year plan. And I'm like, all right, I'm not in any hurry. He was pulling out in his truck. So I was trying to be respectful. So we went on our walk, he left, and about 3-4 months later, I finally just mailed him, because all I had was the address, right? Mailed him my contact info and just said, hey, whenever you're ready, just tuck this away in a drawer. Here's my phone number, name, email address. I could possibly be interested. And not even a year after I did that, he calls me up, and the timing was horrible. Wasn't really ready to buy another one. But I went and looked at it, and I just was like, it's too perfect to pass up. And so we went for it, and I'm still working on setting that up, but we have it live. We've had it live for, I don't know, 4, 5, 6 days, something like that. I'm starting to lose track. And we have 2 bookings so far, which, it's slow season here right now. So I didn't have crazy high hopes for, the first A-frame I launched. I had 11 bookings in the first 24 hours.
Right. Yeah. I remember that one. Just hit the ground running, right?
Yeah.
You're on a lake.
Timing was perfect.
Yeah. Yeah, you got a lake house, like a little lake house, and it's so fun. It's fun, and I bought a lot of properties over the years by doing that same thing of just finding properties I like, and then, and I swear that phone call never comes when you just got money in the bank, you're ready to buy another one. You're like, it's always the worst time that they want that, and so you're like, okay, you got to figure out how to pull it off, because the opportunity's there, and you usually get rewarded for taking that action.
Yep.
So. That's awesome. That's fun. It's fun. I love those. Like I said, those are some of my favorite properties we've ever bought. Is just the ones that were like, and it's funny how much sooner people call you back than they say they're going to. Like, no, I'm not really interested. And you just kind of follow up and like you said, we say the same thing. Just tuck it in a drawer at the house. And when you're ready to think about it, give me a call back and we'll see what we can do. And
it plants the seed, and then they're like, oh, well, I have this, Yeah.
Mm-hmm. Did you have to, values really well because, you're an agent and you know the areas and where you're at. A lot of times I find when I get those callbacks, we don't actually overpay for properties typically either. A lot of times they call back and they're really realistic about price. How was this one? Was this one that they were pretty realistic, or did you have to have to educate them a little bit on values?
Yeah, it was a little interesting scenario because he would not give me a price.
Yeah.
Um,
Yeah.
And so I was kind of winging it. I didn't want to go in too low. I knew that if he put the word out that it would sell immediately to somebody else. So I do feel like I probably tiny bit overpaid, especially with some of the stuff I found after we got into the house that wasn't disclosed, but detail stuff, we're very, my husband is meticulous, and a lot of the stuff that I walk through a house initially and buy, I'm like, oh, we don't have to do that. Oh, that can be phase 2. And he walks in and he's like, no,
we're doing it. Yeah.
Yeah.
That's good. And I find the same thing. I that's the times I probably pay more than I need to, is when they don't give me a price. I try crazy always to get a price from them. And when somebody calls me back in that, they're like, well, what, you just tell me what you think it's worth to you. And I'm like, okay, I don't want to lose it. So I usually do the same.
Right.
It's like,
that's exactly what I did, but it wasn't egregious, so it's fine.
It works in the long run. Right.
Yeah.
Yeah. Awesome. Kim. Well, listen, this has been, I love these conversations. And first and foremost, I really appreciate you allowing other people to listen into this conversation as well. I know how valuable these are for people listening. And so I enjoy them extremely. And I know that they're by far our most popular episodes. And so at the end of all of them, I always ask you, going back, if you could say, okay, what am I going to, what are the lessons I learned, and what do I really want to pay attention to? Or if I could give my younger self or your kids some advice and say, this is what you need to do based on the things that I've learned on this journey, what would that be? Is there something that comes to mind?
However much extra you pad in the budget for miscellaneous, you should double it. Yeah.
And specifically to the capital improvement stuff that you're talking about, right? Yeah.
Yes, but I think the setup always costs me a little bit more too. Even on the later ones, I just always end up, because we are offering that top 1% experience.
Yeah.
And so when you see these other people, or Facebook comments like, oh, you can furnish a 3-bedroom for 25 or 30,000. That's just not realistic when you're setting something up that's not going to be, somebody walks in the house and goes, this is an Airbnb. Yeah. That's not the feel that I want to set up. I have places where I can save money on furnishings. I'm not saying go to Restoration Hardware and buy all of your furnishings, but, start with quality stuff.
Right.
And that, takes a fair amount of investment up front.
Do you have, at this stage in the game, I love that piece of advice, because you're exactly right. I think if anybody that's new into this game, I think that the place that they undershoot the worst is on the setup and furnishings. I would totally agree with that. And especially because everybody says they want to create the top 1% experience, but it's, are they willing to do what it takes to do that? And that is going to be spending a little bit more money, putting really quality things in there, bringing that experience to life, telling that story, all of those things. And it costs, right? And so at this stage, do you have like a price per square foot that you look at? Do you think about like, are you breaking it down in that much detail or not yet?
No, I am not a numbers girl. That's not my brain. I like to build things. I hang curtain rods and do all the measuring. I do a lot of the setup and turnover stuff myself, and then my husband does the hard stuff. But it's I don't get into nitty gritty numbers. I do assign myself a budget for different areas and different things. But after the first couple, I've gained enough experience where I'm like, okay, I'm not going to get a quality sofa for X number of dollars, I'm going to have to spend double X number of dollars, And so I think after so many properties, you kind of get to the point where you're like, okay, I have a little better idea of what I'm really going to have to spend. But I also have a really good idea of where you can save. One of my favorite things to do is to get end tables on Facebook Marketplace. And I just refinish them because it's something that both my husband and I sort of enjoy doing as long as I have the time. And you can get solid stuff that's not some piece of garbage you're going to buy on Amazon that's going to fall apart, first of all, in 2 months.
Right.
And you can get a set of end tables for $50 and spend, 2 hours of your time making it cute with some spray paint or, whatever. And then you can spend the $3,000 on the sofa because I can't paint a sofa.
You can't do the sofa. Yeah, you're exactly right. There are places as you get good at this, you realize the places I can save, the places I can, and also the places I have to spend the money on. And you're exactly right. That's what really dialing in that setup. That's where if you've never done that, like we always try to bring in experts that are really good at that. Like I always have, I use Mike Whitfield all the time on mine. I think Mike's really, really good at doing that because as I set my properties up with Mike, our designer, he's always saying, okay, we got to spend money here, Shawn, we got to spend money here, but here's where we can really save. And being able to do that allows you to still set these properties up and operate in the top 1%. But I always, if you're listening and you're like, well, I need to know where to start. I always break it down in a price per square foot. If you can say, okay, if I want to be toward the top of a market, I need to be somewhere around $35 to $40 a foot is going to be somewhere close to my budget. If I want to be in the middle of the market, $25 to $30 a foot. If I want to be the people that are like budget side of that market, $20 to $25 a foot. And that's going to get you a lot of the really crappier stuff. And sometimes you see, and people talk like, well, you don't need to spend that much money to set these up. But they're also not the ones that are operating at the top of the market, and the money's made at the top of the market. I think you and I both agree that that's the case, and we see it all the time. And if you're going to want to get that raise the bar, you've got to raise the bar across the board, and that setup phase is a major part of that process of raising the bar and getting these properties set up. So, absolutely great piece of advice, and because the worst thing you want to do is not have the money to do it, and you can't get to the finish line, right? And you start setting it up and you're like, well, now my back's against the wall because I can't get from, purchasing this property to actually getting it launched and live because I ran out of money in the meantime during the setup. And that can be really stressful and really hard.
Yeah. Yeah. If you've got a hard end dollar number, you better make sure you've got plenty of padding in there for extras. All the surprises.
Absolutely. There's
especially
always
if you're not buying a property that's turnkey. If you're buying a property that's basically turnkey and you really are just doing setup, it's less risky. But we almost never buy a property that's turnkey. So
you guys are doing all the because of your skill sets too. You're doing the value add properties. And you truly are doing your value, adding value to the properties. But that's what you guys do, right? And so it's not just about the cash flow, adding value and being able to maximize the cash flow on these properties. You know that you're buying assets that by the time you're done with them, they're worth more than when you bought them. And that's
not everybody can do that. My husband's a jack of all trades. I call him my MacGyver. I mean, he can fix and make and customize anything I ask him to. And we don't have to spend $5,000 to have some custom carpenter come in to, create a staircase railing. On this last house we set up, I had taken a solid metal handrail out of our own personal home. And my husband and I are both like material hoarders. So he hoards like construction materials and I hoard throw pillows and blankets. and he had this railing sitting and we had this half staircase in this last house that needed a railing. And I'm like, oh, we're going to have to build this. And how are we going to put this on here? Because it was like open and weird. And he was like, do you think that railing we took out of our house would work? You wouldn't believe how perfect it was.
Really?
Just
That's
like,
awesome.
I'm like, it was crazy. Anyway, not everybody can do that, you know?
No, not everybody has that skill set for sure, but that sure is nice when you do. Yeah, we all want that, you know?
Yeah.
Yeah, that's awesome. Well, you guys that are listening too, and we're gonna, Kim and Travis have a portfolio of 7 properties now. They have a company called Beyond the Path, right? Beyond the Path Vacation Rentals. Is that right, Kim? And we're going to post in the show notes so you can go check out their properties, go check out what's going on. I always say success leaves clues. So go check these properties out, see what they're doing, how they're doing it, how they're pulling it off. And then if you're in the area, definitely stay in one of them, right? And so reach out to them. I'm sure they'd love to host you. And
Absolutely.
Yeah, it's and so we always post that. And then Kim, thanks again so much for joining us. This has been a real fun conversation for me. Those of you that are listening, we know how valuable your time is as well, and we appreciate you spending it with us. And so at the end of these episodes, I always ask you 2 favors. The first one is, if you like the show and you know somebody else who might like these kind of conversations, share the show. Those things help us grow, and we very much appreciate it. If you have more than 30 seconds, like us, review it on whatever platform you're watching or listening on. And the final, most important thing that I ask you at the end of every episode is to pick that one thing you can do today, start building that life you don't want to take a vacation from. Cheers, my friends.
Thanks for joining us on this episode of the Vacation Rental Revolution podcast. Share this with other people you think need to hear about it. And don't forget to subscribe and leave us a review. Hey Grace, is there a website?
Yes! For more amazing content and expert advice, visit Vodacy.com.
Thanks for listening, and we'll see you on the next episode.